Good afternoon. Welcome to Riverview Credit Union Mid-Ohio Valley Entrepreneurship Expo, the movie at Marietta College. I am Dr. Jacqueline Corasani, the Director of Entrepreneurship Program at Marietta College. In case this is the first time you're joining us, the overall theme of this year's conference is learning from challenges, how to adapt, and become a resilient business. All of our sessions are free, open to public. You must, however, register to attend our webinars. Our next session is scheduled for Thursday, October 15 at 4:30 p.m. to 5:30 p.m. In that session, Sarah Arnold, founder of Clutch MOV, will interview the finalists of the 22 Mid-Ohio Valley Entrepreneur of the Year Award. At the end of that session, she will announce the winner of that award. To register, please visit our website at marietta.edu/movexpo-program. Just a quick shout out to all of our sponsors: Riverview Credit Union, our title sponsor; Clutch MOV, our in-kind platinum sponsor. Our gold sponsors are Schwendeman Agency and McDonough Foundation. Our silver sponsors are Premier Bank and Tech Growth Ohio. Bronze sponsors, Trademark Solutions and Tenney and Associates. Today's session is entitled Launching, Rebuilding, and Growing Your Business in the Era of COVID. How to manage cash flow and find alternative finding opportunities. And this session in particular is brought to you in partnership with the Chamber of Commerce of the Mid-Ohio Valley. Nicole Gwen, the Membership and Event Specialist at the Chamber, is with us this afternoon. She's helping us to manage this webinar. Today, we have representatives from various organizations in our region. These organizations provide resources to entrepreneurs. The representatives that are here today will discuss their experiences working with businesses in the region. Specifically, they will describe the Impact Innovation Group, IIG, and how this group was formed, why was it formed, and how it really is working to support the businesses in this area and make sure that they support businesses that make an impact, obviously, and create jobs in our region. Eli Flournoy, the Executive Director of Sugarbush Valley Impact Investment, is going to be with us today, and he is going to moderate today's session. In a minute, Eli will introduce himself and provide some background information. But before he does that, I want to ask you a favor. Look around. Sometimes it's in the bottom of the screen, sometimes top of your screen. Find that Q&A button. We want to make this session very interactive, very informative, so that it will be a session that we all benefit from. And to do that, we need your help. Please use that Q&A button to submit your questions. Nicole here is going to keep an eye on your questions and make sure that all of your questions are answered. Eli, the virtual stage is yours.
Thank you, Jackie, and welcome everyone. I'm Eli Flournoy, and I'm delighted to be here with you today to moderate this panel for today's conversation. As Jackie said, we're here to share our experiences working with businesses in this region, and most importantly, we're here to learn from you what's happening on the ground in this COVID economy. Are you going ahead with plans to launch businesses? And how's it going with cash flow management in your existing businesses? I'm going to introduce myself and the Impact Innovation Group, or IIG, which your panel represents. And then we'll let each of the panelists introduce themselves and how their organizations fit into the IIG mission to bring financing and business support to social impact businesses in our region. Again, we want to hear from you. We've reserved plenty of time for discussion, so please post your questions, as Jackie said, in the Q&A function at the bottom of your screens. You can use the chat function for any technical questions, and Nicole can help you within the Zoom presentation. So I'm a veteran journalist and impact investor. I grew up on a 400-acre farm in Athens, Ohio, and I've been working together with my family and Ohio University for the past 14 years, focusing on environmentally sustainable and non-extractive economic development in our region through the Sugarbush Foundation and a for-profit but triple bottom line company called Sugarbush Valley Impact Investments. My journey was through CNN, where I spent 25 years on international breaking news, to here, and that began in 2006 when my parents created the Sugarbush Foundation as a supporting organization to the Ohio University Foundation. It works similarly to a donor-advised fund. The Sugarbush Foundation relies on joint design methodology to fund projects in Appalachian, Ohio. And by joint design, we mean that every project has to have a university partner and an equal community 501c3 partner. We fund in the areas of environmental restoration, renewable energy, zero waste, food insecurity, and sustainable economic development. So by 2015, after we've been operating the Sugarbush Foundation for about 10 years, we began to see a number of social impact or social enterprise type business ideas emerging out of foundation projects. So we created Sugarbush Valley Impact Investments to provide early stage loans, equity investments, and technical support to help get these businesses ready for commercialization. Sugarbush Valley is looking to invest in innovative businesses in the areas of renewable energy, zero waste industries, local foods, and rural broadband. But we don't want to do this work alone. So we've joined forces with the members of this panel and others to create the Impact Innovation Group, or IIG. IIG is a one-year-old working group with a simple goal of supporting social impact businesses to create jobs in our region. IIG reviews pitches from businesses in the region for impact loan and investment opportunities, and critically helps to direct entrepreneurs towards whatever help they need in order to be successful. In addition to Ohio University, IIG partners include the Community Development Financial Institution that serves Southeastern Ohio, which is called Appalachian Growth Capital, 5 foundations from Ohio and West Virginia, community developers, impact investment advisors, banks, and individual investors. IIG is currently in the process of setting up a COVID emergency business loan fund, which we'll hear more about later. But first, let's meet our panel for today. One of our Impact Innovation Group founders is Carrie Pigman, Executive Director of the Athens County Foundation. Carrie, if you want to bring your camera up and tell us a little bit about your background, how the Athens County Foundation works with businesses, and what your goals are for the Impact Innovation Group.
Sure. Thanks so much, Eli, and hello, everyone. I'm happy to be with you here and looking forward to this conversation with all of you. As Eli said, I'm the executive director at the Athens County Foundation, which is a 40-year-old community foundation focused on building a vibrant economy, building thriving communities, and creating opportunities for individuals to be healthy and well and have opportunities in Athens County. The foundation invests in our community largely via grants to nonprofits, convening and bringing together people to have important conversations in our community, and also by developing emerging leaders through our Leadership Athens County program. More recently, we have engaged in mission-related impact investment, and we're continuing to develop this strategy. Being a part of the Impact Innovation Group gives us great partners and experience in developing that strategy and doing things like this, meeting entrepreneurs and understanding better the landscape and the entrepreneurial ecosystem in our region. I personally am relatively new to this role at the Athens County Foundation, starting in April, which I'll say is a most interesting time to be starting a new job, especially this one. But I have an entrepreneurial background. About 20 years ago, I co-founded and then co-led for 18 years a company called EdMap, which was based in Nelsonville, Ohio. And we were a technology and distribution company serving primarily higher education institutions. EdMap was a venture-backed company. We had 3 venture capital investors, and a big part of my job, especially in the latter years, was related to investment, both managing relationships with our venture funders and also seeking new funding. Ultimately, we closed the business in 2018, but throughout, I gained a wealth of experience, good and bad, working with investors, both big and small, including local angel investors, large East Coast private equity firms, and even a publicly traded company that came pretty close to buying EdMap. After mourning the loss of that business, which I think all of you as entrepreneurs probably understand, I made a very deliberate decision to get engaged in our local entrepreneurial ecosystem. Having served as a board member of the Athens County Foundation, I had become very interested in the intersection of philanthropy and entrepreneurship. As a part of the Athens County Foundation, I was developing a deep understanding of both the challenges and the opportunities for our region to create, build, and grow companies. And I, as an entrepreneur, sort of had the other side of the coin, which was understanding that a huge barrier to that goal is capital access, and that it's extremely difficult oftentimes for startups or rapidly growing companies to access capital, meet investors. And I know in my time as an entrepreneur, I was often very frustrated to see companies located in large metro areas receiving wild valuations and incredible funding, doing the same thing that we were doing. And of course I thought, but they weren't doing it quite as well. Last year, I got engaged with the social enterprise ecosystem at Ohio University's Voinovich School, which is an Appalachian Regional Commission funded effort to grow social enterprises in our region. And I dove in, learning about and meeting lots of really incredible entrepreneurs and understanding what they were trying to build. And with the other partners on this call, one of the projects that I worked on was developing this impact innovation group. Recognizing that capital access is an issue, and also recognizing that there is capital in our region, and that foundations and impact investors have a real interest in finding a way to keep their dollars local and making an impact, not just via grant making for foundations, but also with their investments. I think that we can say that 1 year after getting started, the group has really gelled and is moving forward towards the development of an impact fund. And from my foundation perspective, it's much easier to do this in partnership with others who have expertise in areas where we might not have expertise, and can introduce us to other people and other companies. And together we can sort of take this leap into creating this fund. That's been really important. I think the evidence of the work that we've done was really obvious when the pandemic struck, and we created a mini grant program for local businesses called the Resilience Fund. And now, as Eli mentioned, and John will talk about in a little bit, we're working on creating a low interest loan fund to support local businesses. And with that, Eli, I'll turn it back to you to introduce the next person.
Great. Thank you, Carrie. So next I'd like to introduce Marion Klaus, the Associate Director for Community Leadership with the Parkersburg Area Community Foundation. Marion, how did you find your way onto the IIG team?
Thank you, Eli, for introducing me and for kicking us off here today. I'm very pleased to be with everybody to talk about the work that we are partnering on together to improve and support the business community and entrepreneurial community in our region. So I found my way to the IIG through our foundation's involvement in the effort that Carrie has already talked about, the social enterprise ecosystem grant and program that we have been engaged in for 3 years now with our partners with Ohio University and with several area foundations and other organizations, including Rural Action. And that, as Carrie mentioned, the social enterprise ecosystem program was really designed to provide both technical assistance and capacity building for social enterprises, and to help them become better positioned to access capital to move their businesses forward. And by social enterprises, I'll just explain that really quickly for those who might not be familiar with the term. Social enterprises can be either nonprofit entities that have a aspect of their work that's market related and brings in revenue to support their charitable mission. An example would be Habitat for Humanity, which has what they call Restore, which is a store that sells used building supplies and home goods, and then the revenue generated from that store supports Habitat's mission of providing housing to those who need improved housing. Or a social enterprise can be a for-profit entity that has a social mission as part of its focus. So sort of that, you might hear the terms about triple bottom line kinds of things. So the C program, which is funded by the Appalachian Regional Commission, has been underway for 3 years now, providing a wide variety of support and assistance to social enterprises. And as Carrie mentioned, growing out of that has been the IIG, which is designed to try to find ways to increase the capital that is available to these entities. So we've been a partner in the IIG from its founding and excited to work together. As others mentioned, we can accomplish so much more if we're working together than we can each individually on our own. Let me tell you just briefly what the Parkersburg Area Community Foundation is. We are a regional community foundation, charitable foundation. We serve 10 counties in West Virginia and also Washington County, Ohio. So we are headquartered in Parkersburg, West Virginia, and then serve all the counties kind of surrounding Wood County where Parkersburg is based. Our focus is to build the permanent resources that our communities need to thrive and to grow and to move forward and effectively meet the needs of the people who live in our region. We do have annual grant making programs that we administer throughout the year, and those are primarily focused on supporting nonprofit businesses, nonprofit entities, and we award grants to a variety of types of nonprofit organizations. So our work with business support has been primarily on the nonprofit side, but of course nonprofits are businesses just like for-profit businesses. But we do also provide some support for for-profit businesses, mostly through intermediaries. And I'll give you some examples of some of our nonprofit and for-profit support that kind of relates to social enterprise or business development. We've been a strong supporter of the Wood County Society, which is a local organization that serves individuals with varying abilities. They launched recently what they call the Art Beat Studio, which is an art studio for the clients that they serve, the artists that they serve. And they sell the artwork, and the income from those products benefits both the individual artists and the organization in terms of bringing in revenue for the organization. So we were an upfront provider of operating support, general support, to help that entity get off the ground and have the flexible resources that they needed to get started. We also connected them with the C team, and the C team provided some technical assistance on developing contracts and some things that the organization would need to be able to place its products in various retail sites. From the for-profit side, our foundation has had a long interest in the issue of childcare, and Trace Rouse with the Rouse Foundation, who's a great partner of ours and who's going to speak next, has really been the leader in our region on childcare issues. Together, we have provided a variety of support to help childcare providers many of whom in our area are for-profit entities. And one of the ways that we do that is through a regional resource and referral child care agency called Choices that works with all of the providers in our region. They are a nonprofit entity. And so we're able to grant them funds that then they can use to support all types of child care providers, including both not-for-profit and for-profit providers. Just a couple other things to mention, and then I'll kick it off to the next person or back to Eli. Some of the things that we've been doing during COVID is really trying to focus on providing that kind of flexible support to the nonprofit businesses that we support. We were a partner in the Resilience Fund that Carrie mentioned earlier, both financially and in terms of making decisions about what entities to support. We, as a foundation, we are exploring the concept of impact investing, which Carrie also mentioned, and that's where foundations look at not only using their the income on their investments, because most foundations like ours have an investment portfolio that they're using to fund the grants that they make, but looking at that investment portfolio and saying, how can we deploy those resources more locally to help our community and to invest in important efforts. So we are exploring that at the present time. We also like to be a resource and referral and convening entity for the community. And particularly during COVID, we were making sure that our businesses, both for-profit and nonprofit in our community, knew about things like the Paycheck Protection Program and other federal or state or local relief that might be available to them to help them bridge this very difficult and challenging time. So with that, I'm going to turn it back to Eli, and I look forward to hearing your questions later.
Terrific. Thanks, Marion. One of our key partners is Trace Ross, who's Executive Director of the Ross Foundation. Trace, tell us a little bit about what you and your family are doing and how you decided to and work with the IIG.
Yeah. Thanks, Eli. I'm again Trace Ross with the Ross Foundation. We're a family foundation in Parkersburg, West Virginia. We started. It's really based on the sale of some business. Initially, I was with my dad's businesses for many years. And after that, we went in and he sold that, and I started a foundation for us. Been doing that for about 14 years now. Our focus has really been on community economic development and education most of the time. With that, I'm really working on a lot of our education is where most education and community development is where we put our money right now. I've been doing a lot in that area. In the community economic development, we actually created some loan pools to help small businesses in our area through a regional company called Mid-Ohio Valley Regional Council. Then we've also done stuff with with the loan funds we have. We've been helping businesses both in nonprofit. I'm actually primarily just the for-profit side right now, helping in child cares. We've helped other businesses relating to we've helped with salons. We've helped with some brewery, different things like that we've done. That's really on the small business side of us. Then my other side of us is we're also a family office that helps small businesses in that area to help more aggressive growth businesses, starting from whether it's their early stage of their business or into their mid stage or a late stage, to help launch new businesses. And this is more done through a third party groups we work with. So in doing this, when I got involved, I mean, just like Marion has said, some of our other businesses, we've done a lot through our Mid-Ohio Regional Council and other funding pools. We've done childcare also, which I'm very engaged in right now. And we're trying to help those businesses grow. So those are the smaller things. Then on our other side of us, as a family office, we help invest a significant amount of funds in these areas to really launch these early stage businesses, or mid stage and late stage we started getting into also, to help them grow, see what they can come up with. Some of them are all over the board, different industries. A lot of it's healthcare based, we've invested in, but a lot of these then go public and things like that. So, and again, that's done through groups like MIT and other universities. And at WVU is even doing one right now. So we've done that. So that's where, and then from IAG standpoint, I jumped in with them when I talked with Marion, she was talking to me about it. And I jumped in there because it is something that I'm very interested in. We want to help businesses launch. A lot of this group right now works on the social impact side, and we've done both that and also other businesses, just general industry businesses. So we help both of that area. And so from our foundation moving forward, I mean, we're very interested in continuing the business side of help supporting small businesses, help launching them, and where we want to go with that. We've also been looking at more community development sides to help from an education side. So that's really where we are. But from IAG, I've really started doing that when this week I'm very interested and involved in what you call the private equity stuff. So it's been an exciting time working with the team here, and as a good representative and as a representative of the West Virginia side of the river. So we're trying to help bridge that divide between both sides of the river and bring us all together. So that's really where we are. Again, the businesses we've supported, you get the small ones, and then you get into the much bigger things where we really want to see some successful operations grow. And I'd love to see that happen in the Mid-Ohio Valley. I know what's there is where you can get support, whether it's through universities like OU and other players like that, to help grow those businesses. And our team here is also very willing to partner with groups and talk to them about what are the opportunities. So Eli, I'll put that back to you and let you get on with this.
Terrific. Thank you, Trace. So we could not have established the Impact Innovation Group, and it could not function effectively without the economic development leadership of John Molinaro. So John brought Appalachian Growth Capital to Southeastern Ohio and has established the CDFI as the central banking partner for IIG. So John, if you would give us a sense of your background and maybe give us a little bit of a primer on how a CDFI works and the role that Appalachian Growth Capital plays in regional business support initiatives like the COVID Loan Fund that we're trying to put together.
Thank you very much, Eli. My video is disabled at the moment, but I expect it to be started up in a moment. There we go. So I'm John Molinaro, as Eli said. I retired yesterday from my role as the founding president of Appalachian Partnership, which I came in 2012 to start, along with its subsidiary Appalachian Partnership for Economic Growth, now called rebranded as Ohio Southeast, Southeast Ohio's regional economic development organization and its Jobs Ohio partner. 3 years, we added a second subsidiary, Appalachian Growth Capital. Appalachian Growth Capital is what's called a community development financial institution. and and I continue on the board of directors of Appalachian Growth Capital and on its investment committee going forward. A community development financial institution is a U.S. Treasury certified institution that has been formed by local people to address shortages of capital available for critical needs in local markets. And CDFIs lend and invest in a variety of different kinds of enterprises. Appalachian Growth Capital is formed specifically to invest in small businesses. We received CDFI certification about a year ago. Appalachian Growth Capital currently has about $15 million in capital, and about half of that is deployed, and we are rapidly working on deploying as much of the rest as we can to help businesses through these COVID-related times. We got involved with the Impact Innovation Group several years ago with a couple of roles. First, it's obvious place for us to partner as an investor, since our role is to make affordable loans at competitive rates to local businesses that are having difficulty obtaining traditional financing. And in addition to that, we eventually expect to have a role as an equity investor, although we're not there at this time. Another role that we play in the Impact Innovation Group is that we have the back office strength in loan and investment review, due diligence, loan and investment servicing, that allows the IIG to utilize us as a way to vet and place investments in small businesses on the Ohio side of the river. We're currently chartered just to work in Ohio. That may change in a few years if some federal rules change. So the challenge that we're seeing today with most of the small businesses that approach us in this time of COVID is a cash flow challenge. Many businesses have used their available capital in order to survive the downturn in business. The federal programs that have been available to help businesses in this time, like the Paycheck Protection Program, have been relatively short term and can only be used for payroll and a few other expenses without having to be repaid. And so taking on those loans has affected the balance sheets of businesses. In addition, commercial banks are looking at the softening economy, and they're pulling back their working capital lines of credit to businesses. And so it is a very challenging time for companies to get the working capital they need to regrow their businesses, or if it's a new business starting up, to start up a business in this time. And we are actively working to help make that happen by lending capital to businesses. And we are also working with the Impact Innovation Group on a special loan fund that we hope to have available within the next month or so, if we can complete the capitalization of it, that would serve the Southeast Ohio area of Athens County and the surrounding counties. The idea here is to make loans at very low interest or no interest for up to a 2-year period to help companies obtain the working capital they need. In order to evaluate businesses' credit at this time, we're not here to try to save a business that was going under before COVID. We're looking for businesses that were solid operating businesses that have a history, that were doing well prior to COVID, but need some help in order to reestablish themselves because of the COVID crisis. So we're looking at strong historical financials, but a difficulty obtaining capital at this time. And we are primarily evaluating the companies on the basis of their cash flow management. We offer to anyone on this webinar, on our website, you can find a cash flow analysis tool, 13-week revolving cash flow analysis tool, which will help you manage your cash flow. And also, if you approach us, will serve as the primary financial document that we use in evaluating whether or not your particular needs are good risks for our capital, which does have to be repaid to those who invest in us at this time. So that's a brief introduction. We can get into more nuances as we move into discussion.
Great, thanks, John. Why don't you keep your camera up, and I'll ask everybody else on the panel to bring their video back up, and let's get into some Q&A discussion. So just a reminder to everybody in the audience, you can post your questions. Just type them right into the Q&A section down at the bottom, and we'll try and get to all the questions. But I want to put Carrie on the spot. To start off with here, you mentioned that you started your own business. You learned a lot, good and bad, from that experience. So, what do you think was the biggest challenge? What was the biggest mistake that you made in terms of thinking about how to finance that business?
So many mistakes, Eli. It's difficult to pick just one. One of the things that I love now about working with entrepreneurs is it's given me an opportunity to reframe the mistakes that I made as lessons and opportunities to share knowledge and information with others. So I think probably one of the things that I know I didn't think of when we were initially seeking funding is what we were looking for in an investor. I think entrepreneurs are often focused on what the company can do for the investor and sort of selling the pitch of the company, but not necessarily thinking as much about what the investor can do for the company. And so I think that is, one of the sort of biggest pieces of advice I can give is to be very thoughtful about what you're looking like. In addition to just capital, what gaps are you looking for an investor to fill? Is it making connections to other potential investors? Is it filling a gap that you might have in your skill set? And just really being clear about what it is that you're looking for, in addition to just needing funding for your company.
Such an important point, I think, and John, I think you could reinforce that it doesn't just have to be an equity investment type of investor. When you're working with a bank, it's not just that that you got to be accountable to them, but you need to use that experience to help improve your own management capacity. John, what would you add to that?
Yeah, that's absolutely true. A good relationship between investors and a business is a relationship where both sides gain more than just the money. So I think that Carrie is right on in that. That's especially true when you're talking about equity investment. When you're talking about a lender, there are some roles we can play in helping to advise and add value to the business, and there's some roles we can't play. Because of lender liability laws, we can help a company understand what a bank or a private financing institution may be looking for. And we can help a company understand where perhaps its financial reports and so forth measure up or fall short of those expectations. And so therefore help a company understand what kind of actions they may need to take internally to prepare themselves for a loan or an investment. But what we can't do is help a company actually prepare their pitch, prepare the financial documents that they may be, or application they may be submitting for an investor. And that's where help of folks like Ohio University can make a really big difference.
Great. We have an audience question that was submitted. I'm curious to know what panelists would say are similarities and differences between the private and the social or nonprofit sectors in this area. Marion, what you talked a little bit about how you work with both nonprofit entities, social enterprise type businesses, and for-profit. Is there free money available for for-profit businesses? How do you navigate the difference between a for-profit and a nonprofit business entity?
I think in terms of grant money or free money, it's a little more challenging for the for-profit side to find those resources that don't have to be paid back in some way. That is, I suppose, one difference. But they're all businesses just the same, and nonprofit businesses in this, particularly in this current environment, are facing the same kind of challenges. Loss of revenue, whether that's revenue from not being able to have an art performance, or that's revenue because you have a retail store and you had to shutter your doors for a period of time, or you've had far fewer customers in the recent months. So all are suffering from or challenged with revenue loss of various types, the need to adapt or pivot to find new ways of conducting their business or bringing in revenue. Those challenges are the same. Nonprofits do have the advantage, as you noted, that they can go to some foundations and those sorts of places for grant funds, which again is more challenging for the for-profit entities.
Carrie, you mentioned the resilience fund that we put together, which were grants that were available to for-profit businesses. Are there other opportunities out there like that? And tell us a little bit more about how that worked, Carrie.
Sure. So the Resilience Fund was meant to be a fund that provided small grants to businesses that were struggling with challenges related to shutdown and maybe additional needs they had to reopen, as Marion said, experiencing loss in revenue or needing to pivot. So a group of funders came together and sort of pooled our money to invest in these mini grants into local companies. One of the things that we found, I think, collectively across the region was that there was far more demand than there were funds available. So, that was a challenging part of the process. I understand that the Resilience Fund, while the funds have been depleted, there are some counties who are applying their CARES Act dollars to programs like that to provide grants to businesses. And so I think that is an opportunity that is ongoing in some counties, and as more money could be distributed through the CARES Act, that could continue on.
Great.
Just real quick, in Wood County, both the city of Vienna and the city of Parkersburg have small business relief programs right now. So.
Terrific. So another question from the audience. What is the collective eventual goal of the IIG group? What gap does the IIG collaborative fill that isn't filled by each of your institutions individually? So I'll ask Trace, what can you accomplish with the IIG that you can't do on your own?
I mean, with IIG, it's a great avenue to partner with other groups in the area that will help create a bigger pool for small businesses. I know right now on the Western Union side, we've been working with Mid-Ohio Valley Regional Council to create funding there to help those businesses. So when you say about businesses, I mean, as foundations directly, we cannot help businesses. But yes, that's where I use a third party like Regional Council to help those businesses in times like this. Right now, we still have our loan pools there that can help. Plus, I know other funding has come out through the federal governments and now the city and others to help that. And hopefully more of the CARES Act comes out.
And I know we talked a lot about, as COVID came in and we've been going along within IIG about the differences, the different experiences that businesses on the West Virginia side of the river were having compared to Ohio side of the river, and access to banks, ability to apply for the paycheck protection program, and so forth. What was there? Was it helpful to have the perspective of what was going on the Ohio side to see, as you're getting questions from businesses and organizations on the West Virginia side?
Yes. Yeah, I mean, it helped me to watch what's developing on the Ohio side, and then seeing if there are opportunities where I could come in on the West Virginia side using our network that we have available. And at this time, we looked at some opportunities there, but then it kind of slowed down, so we didn't jump in on that part. But we still have we're very interested in watching very closely, see how the model that's been built on the Ohio side, and see what can we do on the West Virginia side, just so we make those resources that are available. And so that's where we still have worked with others, like the child cares groups and things like that, to help those businesses. Again, we didn't do that directly. We used a third party, as Marion said, Choices and all that, to help that sector. So,
yeah, I think one of the most critical gaps that we're trying to fill with IIG is simply the knowledge gap of businesses about where to go to find help. And oftentimes it's not just even the members within IIG, but it's who we know or how we know the system needs to work. And John, I'm interested to hear. I think that it would be helpful for the audience to know what's the difference between what is your area what is the area that Appalachian Growth Capital as a CDFI covers on the Ohio side, and who does that on the West Virginia side, and how does CDFIs work together with local banks?
Yeah, that's well, first of all, CDFI coverage is not a given in any particular area of the country. We at Appalachian Growth Capital serve the 32 Appalachian counties of Ohio. And those start up at Lake Erie with Ashtabula County and are a big arc that ends about 50 miles east of Cincinnati. It's a huge area. It's about a third of the state of Ohio. Ohio isn't often thought of as an Appalachian state, but parts of it very heavily are. Our counterpart in West Virginia is the Natural Capital Investment Fund, and they primarily work in southeastern West Virginia. They don't have any staff in the field in western West Virginia. We've got a great relationship with them. They helped us get us started. They provided us with documents and templates and policies said, steal what you'd like. And they gave us a huge leg up in it's very unusual for a CDFI to get certified in just 2 years as we did. And their help was invaluable for that. We do have the kind of relationship where we can go back and forth, where if there's a project that is eligible for their programs, we can talk to them about it, or somebody comes to us from the other side of the river with a project that's eligible for their programs. They're a little bit more limited than we are. CDFIs each have sort of their own market. We serve virtually any kind of for-profit business, with just one or two very small exceptions. We can't do anything that's illegal under federal law, like the cannabis industry. They primarily serve in the natural resources and alternative energy kinds of industries. So they don't get involved with every kind of business up and down Main Street the way we do. So they're a little bit more limited.
Great. Got another audience question though. For all the funding sources that you currently have and are planning to create, what would you recommend to a new enterprise, a for-profit or not-for-profit, to help them prepare the best ask? What are the 3 or 4 highest priority elements you seek in your most successful proposals? And Carrie, I might start with you in thinking about a company like New Resource Solutions, one of the companies that we have that has pitched to the IIG, and we've been working with. What is it? What is it you would say that IIG is looking for in terms of the ask and the elements of the proposal?
Yeah, I mean, I think first, we are not expert in the fields that the company is often, in. And so providing a simple, easily understood overview of the market and the problem that the company is trying to solve, understanding, who is likely to be buying the product or using the service that the organization is creating is really important, because ultimately one of the things that an investor cares deeply about is how the company will make money. And so being really clear about how that works, who the customers are, who influences the decisions about buying the product or service is, I think, really important to get clear about. And then I think for all of us who are in this impact space, really understanding what difference the company makes. And so what is that impact on the region? What challenges is it solving in addition to creating value for the company and the investors, but what impact does it have, I think is really important. And as much as that can be quantified, it should be for investors like us who really care about that.
Right. Marion, give us an example of a business or businesses that you see that are having success navigating through these times now in COVID.
Sorry, I had muted myself back off of mute. Yeah, I think it is really important that businesses are adapting and pivoting in this time. And I was trying to think of a couple of examples, and I was thinking about the Resilience Fund that a lot of us participated in some of the applications that we had received. And we received a number of applications from tourism-related businesses. And they were really, several of them were really capitalizing on some of the great assets that we have here in Southeastern Ohio or in West Virginia, where we have a lot of natural beauty, a lot of outdoor activities, where people can come and travel and feel safe and feel socially distanced. And so I really enjoyed seeing how some of those businesses were promoting that, so that they were, trying to attract people here and kind of capitalizing on what people's interests and needs and comfort level is during this challenging time. The other story I heard about that, I heard a presentation about the Hatfield and McCoy ATV trails in southern West Virginia doing the same thing, really capitalizing on that. And they've had tremendous tourism at this time in that area. Just another example, local art, our Parkersburg Art Center, they rely a lot on rental income. They have a nice big indoor rental space that they use, that is used for weddings and events of all sorts. And so it's been a real loss for them to not have that revenue, but they adapted a smaller outdoor space that could be rented and used for smaller events that followed, the necessary guidelines for people to be safe. So those kinds of creative adaptations. And one other one I'll mention, because it's just I think a cool example, one of our local restaurants that, all restaurants were adapting in various ways. But this particular restaurant not only did, a lot of carry out, but they were taking like family style meals. You could order them ahead of time, and they brought them to different communities, surrounding communities, to really make it easy for people. I think they were going to like a parking lot at a local grocery store, and you meet here at a certain time and you can get your family style meal. And, just those innovative ways to think about how you can meet people's needs and still continue your services and bring in income, in these challenging times. So that's just a couple of quick examples.
I think one of the things that that we recognized in the beginning when COVID came in was a concern or perceived concern amongst the business community that sources of capital were going to dry up as private capital, and funders were not going to be putting their money out there, that they're going to pull back and be more careful. And that was one of the things that motivated my family office, Sugarbush Valley Impact Investments, to proactively try to put some investment into a loan fund. And I'm curious, Trace, to know what what your family office perspective was to this, and how you did your mindset change in the because of COVID? Did you change the way that you're you're handling your funding of different projects and businesses?
Yeah, I mean, from our end, again, I'm both sides, as you know. As a family office, when we support the larger scale businesses, from what we've seen of the ones that we worked with, we have not seen a major slowdown on that, because there's always, I mean, you want to help those new businesses grow, and also some existing ones at different stages. And our family has pretty much stayed consistent on where we're going. But again, a lot of ours are on the more national level at this point. But we are interested in the regionals, and I know more on a localized level, there's some more challenges when you look at that versus the large scale ones where you're working with huge universities like we've been doing right now. But
that's great. Yeah. So John, entrepreneurs right now, businesses are, they're struggling to operate. They're struggling to navigate through this COVID economy. And it seems like a kind of a dizzying array of possible avenues you could go to seek out help. And they just don't have the time to waste on going down the wrong path in terms of applying for capital. So what advice would you have for helping businesses decide what money should they go after?
Yeah, that is a really difficult question for businesses at any time, but now it's probably even more critical. The banks that are and financial institutions that are more local and local region focused are much more likely to help a business in this time than the big national brands. And so that's one thing to bear in mind. We are not the primary market for the giant banks. And even if they've got a lot of offices where they gratefully accept our deposits, their money is not flowing back generally into loans for anybody but platinum-plated businesses in the region, mostly larger businesses today. So if you don't have a relationship with a lender that has local roots, my first piece of advice would be to shop for a bank that does, and that understands your industry. And that second piece of advice is really an important one too, because not every bank is comfortable lending to every industry. So it's entirely appropriate to, when you're talking to a bank about working with you, to ask them if they have companies like yours that they're working with. I mean, we've had a situation where, for instance, we had a company in the hardwood products industry, and they that came to us, and they'd been unable to successfully gain a line of credit or financing from their local bank, but that local bank didn't understand that industry. They were mostly focused on Main Street businesses. We were able to help them find another bank 20 miles away that had a very substantial portfolio of financing in their industry and understood it, and was willing to do lending for them when their local bank wasn't willing to lend, except on the basis of the owner's personal assets versus the business's assets. And that is something that we as a CDFI can help a company navigate. We can help them find a lender that's a good match for their type of business. We do that all the time.
Terrific. I want to try and squeeze in one last question. I have an excellent question from the audience. So do you think that COVID-19 is going to have a long-standing impact on those trying to start a small business even a few years from now? Would it be easier to just wait to start up a new business or try and continue despite COVID-19? Who wants to try that one?
I would just say that it's all dependent on the nature of your business plan. Is it one that's heavily disrupted by COVID-19, or are there obvious strategies that you can take for the type of business that you want to start to bypass or even gain from the current COVID atmosphere?
Are there some opportunities out there? Are there some places for those who are thinking about being an entrepreneur? You know, what's an opportunity that comes out of this crisis?
I don't want to monopolize the answer to this question, but I mean, there are some obvious pieces. We have one smaller telemarketing firm that was that was relatively new out of the box, that found a huge opportunity to expand with a federal contract to reach out to Medicare recipients related to COVID issues. So, I mean, there are some unique opportunities, but you have to look at the particular field and see, where might there be opportunities in this crisis? Somebody once said that a good crisis is a terrible thing to waste.
Exactly right. And that sounds like a good last word, Jackie. Are you pulling the curtain?
Entrepreneurs say that, problems are opportunities, and this is it. So yes, look for new opportunities in this problem that we have right now. Thank you so much, the panelists. I learned a lot because I was not really familiar with your efforts individually and together in IIG. So thank you so much. And I will send, I know that, there was not a slideshow or anything. What I'm going to do, I'm going to send the recording of this session to all participants in case you want to just kind of go slow and listen to people and contact them. Thank you so much. I appreciate your help. This was wonderful and very informative. Until next time, bye-bye.
All right. Thanks. Bye-bye.
Bye.